Hello, my name is Washboardjim. I'm the founder of the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. And I talk about the same stuff every single day. So I want to point out today was a lot of propaganda out there again. If you listen to CNBC and listen to Schwab, but CNBC is just like a socialist channel anymore. They're coming in on that bearish crap this morning. And I'm never bearish. I'm always bullish. So we had a pullback first thing this morning. Now this is on the 5-minute. So I was looking at the 1 minute. I trade mostly when I'm scalping trades with the 1 minute time frame. So we had this big sell-off. And I'm going to chart this out for you. I'm going to show you where the snake is. I'm going to show you where the breakout is. I'm going to show you where the pullback is. And I'm going to show you where the boom is. And I've made 11 trades today, and I could have just made another one, but I decided to go ahead and do this video. So I'm drawing out this snake. The snake is a knife. And I recognize head and shoulders. So I'll go ahead and draw this out. Just like that. So that's called a Darvas box. That's called a bull flag. It's called a descending knife. We have a head and shoulders right here. So as I was starting to break out of this thing, we had a pullback, and then we created what you would call an inverse head and shoulders. So I'm going to draw that in here. You have your left shoulder and your right shoulder. Also in the same pattern, you've got what you call a fallen wedge. Started after you had the breakout and we had that pullback to the right shoulder the second time, was maybe the idea to take this trade. Well, it did start to break out. We broke out of the channel right here, and I tell everybody to wait for that pullback and then take the trade, and it pulled back to the previous resistance level, which was a head and shoulders. Real clean, real simple, real easy to understand. So we jumped in the trade on the pullback after we started creating this fallen wedge. Then plus we had an inverse head and shoulders. And then she broke out a little bit and came back down, and I recognized what you would call a double bottom. So I zoomed out, 5-day, 1 minute, and I noticed this big gap in here. This is called a gap trade. So I needed more confirmation to take off the double bottom, and I zoomed out. So I'm going to fill this box in right before, because it gets kind of blurry. I'm going to take it down to that candle right there. That's called a gap play. So we pulled back to the bottom of that gap. Now if I extend this out farther, I need just maybe one more confirmation. So I'm going to fill that gap with a price line. And there we go. We got another confirmation of support, support, resistance, 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 and resistance. And then that fills in that thing there. So we're back to the day here on the 1 minute. We've got a fallen wedge, we've got an inverse head and shoulders, we've got a double bottom, and we got a gap fill with confirmations of the solid support, even zooming out farther. So we took the trade and we added on, and we run it up to the top of that gap. And that was an exit idea. She broke out and then she pulled back and respected that gap twice. off the 21. Now we're using the 9 to stay in the trade, but I took profit on the top of that gap. So we had a double bottom on that gap, on the top of that gap. Then it runs up and respects the 50 all the way up. So every time it pulled back and bounced off the 50, you were able to scalp that trade. So we had a guy in the room looking at the 5-minute. So he's sitting here calling this trade out. We had a resistance level for about 8 minutes. And then it finally broke out. He even said when it was going to break out, and it popped right out. Popped right out. It respected the 9, which means we're still bullish in this trade as long as you're holding that 9 EMA. And then once it broke out, we had 3 white soldiers all the way to the 200 SMA. Now I've always talked about, if you go back, there's probably video after video after video of me using the 200 SMA as a support level and as a resistance level. So when I started doing this video, we pulled back to the 9 with another hammer for another entry idea, because it respected this 9 all the way up on this 5-minute time frame. And then we just had another pop past the 200. So now the 200 SMA becomes support, because that was the previous resistance. It's matching up with the 9. So it's either going to be the 9 or the 200. Now you're getting late in the day, and you don't want to take as big of a risk as you would throughout the day. As the time starts to collapse, you want to be a little bit more careful, a little bit more diligent with your funds, so you won't get stuck in a knife in case they just want to sell this off. Now there's a lot of negativity out there. A lot of fat cats are sitting on the sidelines and doing their best to try to calm this market down. I've never been so bullish in the 22 years that I've traded. I mean, I'm not lying, I'm not fibbing. It's in video after video after video where I say this is the most I've ever been so bullish in the market. So every dip is a buy, and all it took today was a lot of patience. And I was scalping on the way down, I was scalping on the way up. Just remember the 200 SMA, remember the gap. Remember one thing, before you get into a trade, you need more than just one confirmation. It's either from a chart pattern, a moving average, or being in the now. Right now, there's a ton of bears out there that are very experienced, so-called experienced institutional traders that are trying to talk us out of playing the market the way we're trading it right now. I mean, just constant. Oh, we're overbought, we're overextended. It's just natural to have that feeling when we had such a big run. But I'm thinking every dip is a buy. I'm not going to sit there and listen to them tell me we're going to go down to $200 or $300 in a stock. I'm going to be jumping on these trades. We've had some hellacious runs, ones that that worry me some, but I'm not as worried as I have been in the past. For one, we got SNDK, SanDisk. This stock has been a great Friday trade. Last Friday, boom. And it's pulling back, setting up for that trade again. But if you look at the weekly time frame on this, we've had a run from 27.89 in the 3-year period all the way up to $1,600 even. You look at the daily. They even had, this morning on CNBC, they were talking about how bad AI was. How bad AI is. They want to bring this market down so they can get in on the dip. Buffett's all cash. So they're coming out saying, the Buffett theory. If he's all cash, we should be cash too. I don't listen. That old man doesn't even have a computer. He doesn't even know how to use a computer. mean, have it make sense to me. It doesn't. It makes no sense at all to me. So here on the daily, we bounced off the 9 today, and that would have been a good trade to take. I've been saying wait for the 9 to take the trade. Boom. We had a big bounce off that 9 EMA. But this is a SanDisk, and it's had one heck of a run. $35 this year alone, all the way to $1,600. So I'm expecting this thing to pull back even farther than what I got these alerts set at. But for right now, if it doesn't hold the 9 and it starts to go below the 9, I want to look for the 21 and try to catch it off that and scalp that trade up, or wait this Friday and take it Friday like I did last Friday where I made a ton of money. So I just wanted to say in this video alone, you need more than one confirmation when you take a trade, and the 200 SMA has been a beauty. Let's see what this looks like on the 1 minute. Support, support, resistance, 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 support. Failed it. Today when we hit the 200 SMA on the 1 minute, we broke a little bit over it, then came back down and then finally broke it. And then it becomes respectful after the 200. So the 200 SMA on the 1 minute became a pivot point. On the 5 minute, the 200 SMA became a resistance level. We hit the resistance, and then it pulled back, and then now it became resistance again, the 200 SMA. On the 1 hour, it's probably way below it. We pulled back, we hit the 200 EMA with a tweezer bottom. Could have took that trade off the 200 this morning. Run up and hit the 100. That's on the 1 hour, 15 minute. We have an inverse head and shoulders. So we got a snake. Looks like a wedge, but actually a snake. So we had a snake breakout, and on that breakout we had an inverted hammer with a tweezer bottom. I would have took that trade, run it up to the 21 and got out of it. Then we end up hitting the 63, the 63, the 63, the 63, the 63, and the 63. So along with this lesson about the 200, you follow the moving average that it respects the most. The 63, 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 and the 63 for a resistance level to know what you want to get out of that trade as it respectfully respects the 63 EMA. That's on the 15 minute. So I've been accused of just trading 1 minute. Well, that's not the case. I got different time frames that I look at every single day. Not all of them, but I look at them a lot when I'm looking at a trade to try to give me a confirmation of, is the stock bullish? Are these different time frames telling me that the stock is bullish? Which a lot of times you can tell maybe one of them might not show that, but a lot of others might. So if you got 5 confirmations as I go through my major time frames and 4 of them are a hit, I might be taking that trade. So I could tell you a lot more, but I want to make this short and sweet. Actually, it's not that short. Been going on for a little bit. But yeah, different time frames. Use the 200 SMA. Just follow the moving average that it respects the most. And that's where you're going to find your resistance levels and also your support levels. And if we do break that time frame, like if we do break the 63 here at the end, that now will become support as a pivot point. So we come in here tomorrow and this thing breaks up to the upside and comes back on the 15-minute time frame. I'm going to be looking at that trade to take that trade off the 63 because it respected it so many times within a 24-hour period. And that's it. That's the sneaky snake trading strategy. We talked about gaps. We talked about snake breakout, pullback, boom. We talked about the 63. We talked about the 200. We talked about the 9 EMA. We talked about the 200 EMA and SMA. And we talked about the tweezer bottoms. We talked about an inverted hammer. Keep an eye on them candlesticks as it starts to break out of that knife. And just be patient and wait for the pullback. Once it breaks out of that knife, it's going to pull back. And if it respects the previous resistance on that knife, you have a good trade to take. If you go in small, then you add on. That's why I add on, because I have confirmations to add on more trades and make more money and get out at a lesser time instead of going in small and trying to hope that I'm going to make it big. At least I can get a short, easy scalp at it and make $400, $500, $600 a trade. So that's it. My name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now.